Castellum has a market opportunity of over 60 billion. Only in the US, cybersecurity market, 60 billion. And the market cap of this company is only about close to 80 million. You can see that the stock price in recent months went up quite a lot, over 4x, and of course at the highest peak, over 11x. An amazing performance. And this stock may go up again. You might see another bump in the stock price like this. Over 10x, close to 10x. And this is the good part about this company. Besides this huge market opportunity of over 60 billion, only 2023, because this market is expected to grow by 10% a year. So by 2030, that market size will be much higher, double, over 100 billion. And if you look at this company, what they're doing, if you read the reports, you can see that this company, Castellum, is focused on building a large and successful technology company in the areas of cyber security. So that's why I said that the market opportunity for this company is over 60 billion. This is one report. You can read more reports. For instance, another report says that the market size is close to 60 billion in 2023, be aware of this, and is expected to increase to over 166 billion by 2042. Compound annual growth rate over 12% a year. Other report, again, a market size over 116 billion. So they have huge opportunities. And this company, if you read more about it, they are focused on cybersecurity, information technology, electronic warfare, but everything is the area of cybersecurity. Be aware that they've done more acquisitions, more business combination. You can see here since 2019, they merged with other companies, they acquired other companies, and they expanded their services. And the more they grow in their business, the higher the chances of succeeding in gaining more market share in this market size. Huge market size, over 60 billion. Now, another plus for this company is the majority of the revenue is derived primarily from services provided to the federal government, the US government. You have to know that. The company performs software design work and other contracts for software development. So, as they have a huge client, federal government, you can also look here at this statistic, not here, but here. The defense and government for the US represents a big size of this total market share of 67 billion. You can see here. This means more than 10 billion only from the government. But as this company, Castellum, is focusing on expanding their business by acquiring more companies, they might go into other subsegments: manufacturing, IT and telecom, healthcare, and so on. So their opportunities are quite huge. You only have to rely on the management that they will do a great job. If they do that, there is no doubt that this company will grow more in the future. Especially right now, as the market cap is close to 80 million and is quite small compared to other companies. If they hit the jackpot with a new acquisition, or they develop internally a new platform, cybersecurity platform, and offer other services, then the stock price can skyrocket again, another 10x easily. And if you were to compare this company as a software company based on their revenue, you look here, the revenue for the last 9 months was about 34 million. So per year, they might make over 40 million, even more than that, 40 million. And compare only the revenue to the current market cap, 40 million with 80 million, you see that the stock price is undervalued as long as they keep growing. If they stop growing, then the stock price is not that undervalued. So from 40 million in revenue, they can easily go to 100 million as long as they keep delivering great services. Now, if you read on their website, you can see that they have developed qualified business opportunity pipeline of over 400 million and has a total contract backlog over 90 million. So you also have some numbers from them. They already have 90 million in backlog. That may be 90 million in revenue. And again, compare 90 million with the market cap, seems a little bit undervalued. And if you compare their business opportunity pipeline, the contracts that might be signed in the future of over 400 million, you see the difference. 400 million here, and the market cap of only 80 million, close to 80 million, you have more than 4x. I mean, you might have more than 4x. So it seems quite undervalued. Moreover, this is not all. Another plus for this company, and I was surprised, is the management. Here, you see who owns the company, this company. You can see that the management owns 45% of the common shares. 45% of this company. Castellum, the management owned 45% of Castellum. And you see their names here. Of course, the CEO, the current CEO, owns 3.4% of the company. Now, this is good. This is quite good because they own the common shares like retail investors, normal investors like us, and they might not issue so many shares. If you look at the number of shares of Castellum, you can see that the dilution wasn't that high. In 2022, they had 20 million, and in 2024, 57 million. Yes, they doubled this number, but compared to other companies where you see a massive dilution, 10x, 5x, this is quite good, especially from 2023 here. At the beginning of 2023, the number of shares were around 43 million, and now 57 million. So their dilution isn't that high, especially that the management owns a big part, I mean half of the company. As they have the US government as a customer, I think there might be more opportunities in the future for them. Maybe that's why they own so much of this company. Maybe they are hoping they will gain more contracts in the future from the US government, federal government. If that happens, imagine, as they said, 400 million pipeline opportunity. If they do more than that, let's say they gain a contract of about 1 billion, then you know the answer. The stock price over 10x, 20x. So this is the upside. This company can go up a lot, especially from the current level. Only 80 million market cap. And if they keep growing their revenue, you will see big gains in the future, especially in the stock price. Now, the good part about their latest report, their latest results, the revenue hasn't gone up that much, just a small decline you can see here. And for the last 9 months, just a small improvement. The good part is that they reduced their losses here. Total expenses, or here, better said, loss from operations. Last year, for the last quarter, they had 8.5 million in losses, and this year, 1.3 million. For the last 9 months, 15 million last year in 2023, and 5.6 million in 2024. So they succeeded to reduce their losses. As long as the revenue goes up and they reduce their losses, the stock price will rebound again. Another bump in the stock price. As I said, the good part, you look at the number of shares compared to last year, just a small increase from 48 million to 57 million. Not that high compared to other companies. So the upside looks quite great. You may have another jump in the stock price like this, especially if they announce another major contract with the US government. The bad side, the downside, is as the management owns a big part of this company and has a voting power close to 50%, 45%, they might change their mind anytime to issue. They already have some preferred shares, so they might continue to issue more shares, especially those common shares. You have to be aware of that, to watch better the number of shares. You also have to be aware of the government, because now the government is their main customer, and as you probably know, we have more recently DOGE, Department of Government Efficiency, which may clean more contracts in the future. They will focus on efficiency. So you have to see how bad it will be for Castellum. If they do a great job, they provide the services, high quality, then this department won't be a risk. They will continue to gain more contracts and increase the revenue. But if their contracts were gained just by having good relationships with some people from the government, then the revenue may be at risk. So you have to be aware of that and watch this company closely, because also the risk is quite high. Dilution, they might not become profitable, and they might lose the most important customer, the federal government. That's why you have to watch it closely. The reward is quite high, as I said, another 10x, but the risk is also another decline of 50%. The stock price may go down to 10 cents. This is the risk. You have to understand it and invest based on this ratio. Look at the risk and the reward and size your investment. Don't put all your money. So that's it for this video, and if you have other questions, please let me know in the comments.